Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce, mediation, and valuation services in St. Louis, Missouri. Today, we will actually discuss environmental, social, and governance policies, or ESG policies, and its effect on valuations with Mark Zyla. Mark Zyla is a valuation expert in Georgia, and he's the managing director of Zyla Valuation Advisors, an Atlanta valuation and litigation consulting firm. He's also the chairman of the Standards Review Board for the International Valuation Standards Council. He was also one of the primary authors of the education program that the AICPA and the Royal Institute of Chartered Surveyors for the credential, which is certified in Entity and Intangible Assets, or the CEIV, which basically certifies valuation professionals in the valuation for financial reporting purposes. Do you see these corporate policies impacting the valuations? Or are we looking at that companies are going to have to spend more in general to be like active corporate responsible participants in the world? And is that going to eventually change the benchmarking because of some of those issues?
Yeah, I mean, all of that. I like to think of it in terms of, again, the three kind of components of valuation. It's the cash flow the company generates. So these corporate policies will likely impact the cash flow. So in some areas, be increased investment, which increases capital expenditures, which may initially reduce cash flows, but have a long-term positive impact. It may impact risk. It may lower cost of capital. There are academic studies that purport to show that having a positive social policy will eventually reduces cost of capital, which increases value. And then long-term growth rates. There may be things such as simply as, if you don't have these policies, how is this going to impact your long-term viability as a company? So each of these factors eventually impact the three basic components of valuation. And there's ways as valuation specialists we can look at those. Right now, the profession, we're looking at frameworks, like how does it impact the top line? If we have favorable policies, will people buy more product from us so we have higher revenue? If we're more aware of energy costs or costs of use of water, does that lower our cost structure so we have a better bottom line eventually because of these policies? Some factors maybe is our workforce. Is it our training costs, our hiring costs may be lower because they want to work for companies that have these positive policies. So our retention of our skilled workforce, so it perhaps reduces our company's labor costs. So each of these policies eventually have a cash flow impact, which obviously has an impact on the overall valuation.
Okay, that is really helpful to understand, because I think as we're talking about it, basically these are going to be corporate values that are going to potentially be more valuable going forward but there's still a cost involved in it.
That's right.